Welcome back to the Daily Crypto Roundup, the show that keeps you ahead of the market every single day, with clean analysis, real context, and the latest headlines shaping the entire crypto space. Today is one of those days where the market isn't being driven by one big explosive story, but by a collection of powerful signals all pushing in the same direction. We've got massive institutional buying, ETF inflows picking up, a new Ethereum staking ETF filing from BlackRock, crypto adoption spreading into new countries, key regulatory wins for exchanges, and Bitcoin stabilizing above the 90,000 mark as anticipation builds for the Federal Reserve decision. It's a day where the data, the flows, and the headlines all point toward one thing. The market feels like it's preparing for movement, not reacting to it. And we're going to break down all 10 of today's biggest stories so you know exactly where things stand right now. Before we begin, a quick reminder that the weekly XRP giveaway is live. 10 XRP go to the best comment of the week, the one that makes us laugh, teaches us something, or adds something of value. And another 5 XRP go to one random listener. To enter, all you need to do is rate the show 5 stars on Spotify or Apple, and drop a quick comment saying "done" or sharing your thoughts on today's episode. Your ratings genuinely push the podcast higher in the charts and help new listeners discover the show. If you enjoy the daily content, take a second to tap that 5-star rating and join the giveaway. Okay, let's take a look at today's market prices, exactly as they stand at the time of recording. Bitcoin is trading at $90,090. Ethereum is sitting at $3,116. XRP is priced at $2.07. Binance Coin is trading at $896. Solana is at $138. Tron is at 28 cents. Dogecoin is at 14 cents, and Cardano is priced at 43 cents. These are today's latest prices. No ranges, no estimates, just the live numbers in front of us. And all together, they paint a picture of a market that's stable, slightly bullish, but clearly waiting for macro confirmation next week. Now let's get into today's top 10 stories, beginning with one of the most surprising and impactful structural developments in Ethereum's ecosystem. BitMine Immersion Technologies, a crypto-focused treasury and infrastructure firm, has now publicly disclosed that it holds more than 3.86 million ETH, which represents around 3.2% of the entire circulating Ethereum supply. This is an enormous number. It's not a whale wallet quietly accumulating in the background. This is a public treasury position, and the scale of it signals something deeper. Ethereum is increasingly becoming a treasury asset for corporations, not just a speculative asset for retail investors. When a company accumulates this aggressively, you have to ask why. And the answer isn't hype, it's structure. Ethereum's supply is tightening. Staking continues to lock away tokens. And with exchange balances dropping to record lows, the available supply for actual trading is shrinking. That means companies that believe in Ethereum long-term want to secure their positions before the supply dynamics shift even further. This BitMine disclosure is one of the most overlooked but important stories of the day, and it sets the backdrop for a potentially powerful Ethereum narrative heading into 2026. Staying on the Ethereum theme for story number 2, BlackRock, the largest asset manager on the planet, has just filed for a Staked Ethereum ETF. Not just a regular one, a staked product. This is the first time a major U.S. financial institution has attempted to give traditional investors exposure to staking yield through a regulated ETF structure. If approved, this changes everything. It bridges the gap between decentralized staking rewards and traditional finance. It turns Ethereum from a simple digital commodity into a yield-bearing asset in the eyes of institutional allocators. And it opens the door for pensions, endowments, and multi-billion-dollar funds to earn passive yield on Ethereum without touching a wallet, running a validator, or dealing with the technical side of staking. What this tells us is simple. Institutions aren't just buying it for exposure. They're now trying to monetize its economic features. And when institutions begin seeking yield from Ethereum, the long-term investment case becomes even stronger. Story number 3 centers on massive inflows into Bitcoin ETFs. Over the last week, spot Bitcoin ETFs pulled in more than $352 million in new net inflows, while short Bitcoin funds experienced large outflows. This is exactly the kind of shift you see at the beginning of a sentiment reversal. When bearish funds bleed capital and bullish funds attract new institutional inflows, it signals that large money is repositioning. And because ETFs are now one of the primary gateways for US institutions to access crypto, the flows matter. They're a clean window into sentiment. What today's inflows tell us is that institutions expect volatility, but they expect volatility in the upward direction. It's a story that fits perfectly with the market's current posture: cautious, but leaning increasingly bullish. We are going to pause here for a quick word from our sponsors. Stay with us.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Now, the overall crypto market rallied today, with Bitcoin, Ethereum, XRP, and Dogecoin all gaining ground as traders brace for next week's Federal Reserve interest rate decision. Bitcoin holding above 90,000 is a psychological stabilizer. Ethereum holding firmly above 3,000 reinforces confidence. And altcoins moving in tandem suggests underlying appetite is returning. Markets are reacting not to current conditions, but to expectations. Specifically, the expectation of a 25 basis point rate cut. That single macro decision could be the spark that redefines the market direction for the remainder of the year. Today's upward movement isn't euphoric. It's controlled, measured, and fundamentally driven, which is the healthiest form of bullish momentum. Now, to a key development. Binance has officially become the first crypto exchange to secure a full global license under the Abu Dhabi Global Market (ADGM) regulatory framework. This includes approval for exchange operations, clearing services, and brokerage activities. Whether you love or hate Binance, this is a huge step for the industry. For years, exchanges have been criticized for regulatory ambiguity. Now we're seeing the largest exchange on the planet win approval from one of the most stringent regulatory jurisdictions. This signals to institutions that crypto venues are maturing, complying, and moving toward global regulatory consistency. And institutional money only flows into spaces where rules are clear. Story number 6. Robinhood Markets is expanding into Indonesia, acquiring a local brokerage and crypto trading firm to offer trading services directly to one of the largest and fastest-growing retail markets in Southeast Asia. Indonesia has a massive young population, a strong appetite for crypto, and one of the highest retail adoption rates for digital assets. Robinhood entering this market suggests two things. They're betting on global crypto growth, and they're positioning themselves in regions that will likely dominate retail adoption over the next decade. This is a big international expansion story with real long-term implications. Now let's go back to Bitcoin for a second. Bitcoin, which has stabilized above $91,000 as fear continues to ease. This isn't just price action, it's sentiment action. Traders are no longer bracing for immediate downside. There's a calmness returning to the market, the kind of calmness you typically see before a major catalyst. The market isn't euphoric, it's not complacent, it's attentive. And that is exactly the environment you want to see heading into a macro decision as significant as the Fed meeting. Whilst we are watching crypto fund flows, not just into Bitcoin ETFs, but across the entire crypto fund landscape. Ethereum funds, XRP-focused funds, and broad-based altcoin funds have all seen fresh inflows as institutional allocators rebuild positions. This is important because institutions generally don't chase short-term rallies. They accumulate during periods of uncertainty. The fact that they're rebuilding crypto exposure now tells us they believe the worst of the macro pressure may be behind us. Investors don't allocate hundreds of millions into ETFs if they believe another major leg down is coming. And finally, the altcoin sector is showing early signs of rotation. Not a full alt season, not a blow-off rally, but rotation. Coins like ACA, Take, and GLMR are among today's top gainers, rising between 30 and 35% as speculative appetite returns to the market. In every crypto cycle, altcoins lag behind Bitcoin and Ethereum until traders regain confidence. And today's movements in the smaller cap assets tell us traders are beginning to look deeper into the market for opportunities. It's early, but it's a sign. When you put all of today's stories together, a clear pattern emerges. Institutions are buying. Treasuries are accumulating Ethereum. ETF inflows are rising. Exchanges are winning regulatory approval. Retail platforms are expanding globally. Bitcoin is stabilizing. Ethereum is firming. Altcoins are flickering back to life. And all of this is happening days before a major Federal Reserve decision. The market isn't reacting emotionally, it's preparing strategically. As we wrap up today's roundup, don't forget to rate the show 5 stars and leave a quick comment for the XRP giveaway. Let me know what you think. Are these institutional inflows a sign of the next leg up? Is Ethereum positioning for a major supply squeeze? Are altcoins about to rotate? Or is the market simply pausing before a storm? Whatever you think, drop your thoughts below. And as always, we'll see you at the top.